Hey guys, welcome to Bridge Insurance Group. Here I am JQ the intern, and I'm going to be doing a questionnaire panel with all of the agents here at Bridge Insurance. So I have a couple questions I'm going to be asking them, just some questions that everyone should know about insurance, and then they will answer it for you. So first question is for Kate. Kate, what is the difference between a PPO, an HMO, and an EPO?
Yeah, so they're just different plan structures. So an HMO stands for Health Maintenance Organization. It's the tightest network. You're required to stay within the network of doctors. You do need a referral to see a specialist, whereas a PPO is a larger network. You get to choose who you go see, but you may pay higher out-of-pocket costs if you go to a provider that's outside of the network. Then an EPO is a hybrid of the two. That is an exclusive provider organization, so you do not need a referral to see a specialist. The network is a little bit larger than an HMO. It's a little bit more affordable, but you do have care for emergencies if you go outside of the network. So that's the three.
Awesome, thank you. Next question is for David Barry.
Yes.
Can you tell us what the basics of Medicare are?
Yes, the basics of Medicare then. This is kind of going back to learning the alphabet. There are four main parts, A, B, C, and D. A covers your inpatient hospitalization, your skilled nursing, hospice, and home care. Part B covers your outpatient services such as your doctor's visit, your testing, outpatient surgery, durable medical equipment, and in some cases your Part B medications such as chemo and dialysis drugs. Part C is what we call Medicare Advantage plans. They cover what Part A covers and Part B, and generally most of them cover your prescription drug kind of all rolled into one. Part D is a standalone drug plan in which there goes with a Medicare supplement then.
Awesome. All right, and the next question is for Ms. Lynn. So I've heard a little bit of the term disability insurance, but can you just give us a broad understanding of what that is?
Yes, so disability insurance is really income protection. Your ability to earn income is very important, and so disability insurance is if you're unable to work either at your job or at any job, and there are different definitions that apply to that, we protect your income.
Awesome, sounds very fun. Next question is for David Eli. What is and how do you use discounted dollars?
Most insurance is bought based on covering a specific thing. Say you buy a boat. You want to have enough insurance to pay for that boat if something catastrophic happens. Life insurance is typically based on need, and that's what would a family need in the event of an untimely death? Well, they need money. And like any other good, we sell money. So when you're looking for a deal on something, if I was going to sell you $1, it was worth $1, I'd charge you $1. Discounted dollar is a way that we can offer our clients a large sum of money for a little bit of money. In other words, they write a small check, we write a big check. And for somebody that's in their 20s and looking for coverage, we can get $500,000 in coverage for maybe $500 a year.
Mm-hmm.
So the trade-off is you pay $500, we pay $500,000 if God forbid something happens.
Yeah. Wow. So the next question is for Jeff. Just in general, how much coverage does a person usually need, or how do you figure out how much insurance someone needs?
Thanks for that question. So the short answer is you want to have enough coverage to protect your assets. For everybody, that's different. It's a standard. A good coverage limit would be 100, 300 on your automobile insurance, 100 on property damage. Your home, having a minimum amount of liability coverage would be, I'd say, 300,000, depending on the price of your home. Might be a little bit more than that, but everybody's different. We don't agree with anybody being underinsured or overinsured. So the best answer to that question is to talk to your insurance agent to help figure that number out for you.
Sweet. All right, guys. Well, we are in the second round of our questionnaire panel, so we're going to go back to Kate.
Oh.
Kate, what is a
Round two.
deductible? Oh yes, the fun round two. Kate, So what is a deductible, and also what is co-insurance?
Yeah. So a deductible is just a set dollar amount that's built into your health insurance plan. Generally, you must reach that amount before your plan starts paying towards your services. However, in certain plans, there are some preventative services that are covered before you reach your deductible. So that just depends on what type of plan you have. And then co-insurance is a percentage of, your covered services that you're responsible for paying. So if your plan grid says x-rays 20% co-insurance, after deductible you have to reach your deductible, and then you're responsible for paying 20% of the total cost of that service. So that's what co-insurance is.
Very cool.
Good answer, good answer.
So we are back to David Barry. So how are my medicines covered?
Yes, we get this question quite a bit then. Drug coverage is in basically 4 different stages. You have what's called the deductible stage, which depending on your medication, you pay the full cost of that medication until you reach that deductible, and then you would go to a copay. Then there's the initial stage, which is after the copay stage, or the deductible stage, sorry, where you generally have copays through that time period. Now comes the third part, which it's not a sweet treat, but we call it the donut hole then. This is the infamous donut hole then.
Not sweet.
When you reach the donor hole when your cost to total of what you paid for your medications, in addition to what the insurance companies paid, reach $4,660, then you get put into the donor hole, or the coverage gap. So when you're in the coverage gap, you pay 25% of the retail cost of the medication until you reach the next threshold of $7,600 then. When you reach that amount, then you come back out and you're in the catastrophic phase. Catastrophic phase, your cost will go down greatly, then generally you're going to pay 5% of the cost of that. So again, that's the 4 stages. Not everybody goes through all that, but again, we can help you determine where you would be, and we can help you estimate that for your needs then.
Awesome, thank you. And back to Lynn. So another question about disability coverage. If I have disability coverage through work, should I get my own insurance?
Absolutely. One of the things is any work-related coverage, whether it's life insurance or disability or health, is linked to your job.
Sure.
So when that job ends, so does your coverage. So having an additional protection on your ability to earn income, and again, being very specific to your field of expertise, because if you're a neurosurgeon, you don't want your disability policy to exclude you from working at Chick-fil-A, as lovely as that is. You want to be able to match your current income level. So it's very important to not link that specifically only to what your job offers.
Great. Awesome. So question for David Eli, why do I need life insurance?
I'm still thinking about Chick-fil-A. Why do you need life insurance? Thanks for the question. It's a great question. Everybody needs life insurance regardless of what stage of life they're at. You particularly? Well, one of the things that you can do as a young intern is ensure your long-term insurability. We know there are 2 certains in life. Right now you're alive and healthy. Someday you will die. What we don't know are the 2 uncertainties. At some point, something's going to happen, health-related, that makes you rated. And it's going to cost more for insurance. And then a little bit further down the line, if you're lucky, in a manner of speaking, something can happen, you become uninsured. There could be a long-term diagnosis, a cancer diagnosis, something like that. So, especially with younger individuals, I do recommend that they purchase some insurance now to guarantee their insurability. And what that means is that they can get a very cheap insurance policy that they can then convert to a permanent coverage down the road if something like that were to happen.
Sure, sweet, thank you.
You're welcome.
And last question that we have for our panel goes to Jeff. Jeff, what are some of the best ways to save money on insurance?
That's a great question, and probably the most asked question of anybody is how can I save money on my
Yes.
insurance, right? And the number one thing, the biggest discount you can get on your insurance is by bundling your insurances. If you have auto and home or renters, motorcycle insurance, find a company where you can bundle it together. You're going to save the most money that way. And then the second way would be to find different types of discounts. You can adjust your deductible. The higher the deductible, the lower the premium. All right. right? So that's another way you could save money. And then also make sure that that you don't have any unnecessary coverages, or any coverages where they're doubled, or their policies is not necessary. So again, talk to your agent and find out what you need and get the right policy for you.
All right. Well, thank you guys for joining us on our questionnaire panel with all of our lovely insurance agents here at Bridge Insurance. Make sure to go ahead and follow us for some more helpful tips and tricks for insurance. Let us help you
Be protected, be prepared, and be informed.